Well, good afternoon, everyone. It's a 3:15 on the last day of January 2023. So the first month has gone already. It's been a good month for stock markets, much, much better than last year. And the old saying is that the year goes the same way as January goes. I hope that's in fact the case. As we look at VectorVest US, we've been running now for about 45 minutes. The S&P 500 is up 13 points at 4031, and all the measures of the trend on VectorVest have gone back to up. Yesterday, in that sell-off, the short-term trend turned down, but so far today it's turned back up again. We've got a huge week of data, folks, and clearly that's led by the central bankers. We've got Powell tomorrow and his advice. I think it's 7:30 UK time. We've got 2:30 Eastern time. On Thursday, we've got the Bank of England. We've got the ECB. Friday, we've got jobs. And we've got a couple of ISMs as well out of the US. So a huge week of data plus big tech reporting. Markets look, I'll put up the VectorVest composite of the US. Markets look a little bit overbought in the short term, certainly. As you can see over the last year of data, these medium term signals, as you can see, here's my wee line, these have come to nothing. That was the largest one in June. Is this one going to be the same? Certainly there's an awful lot of exceptionally experienced voices saying the same. I listened to Ray Dalio this morning talking markets down. Jeremy Grantham has been talking markets down. If I get rid of all those lines, the most positive thing that I can say in this chart, and I've remarked about it many times, is that the market would seem to have made a rising bottom here and cleared both that trend line, and the nice thing about that one is that it broke it and kissed it. That's always a good sign. It also seems to have stuck its nose above this last old top as well. If I put on my dear old friend the stochastic, and we can see that the stochastic, if I blow it up to 6 months, is in a overbought situation, can stay up there for a long time, as we saw here. But when you start to see divergence, where the price has made a slight new high, that's made a falling top, that's normally saying that there is a turning point. It can run on, as we saw here, to what technicians refer to as compound divergence, but certainly the market's susceptible to bad news. And of course, bad news for the stock market could be good news for Main Street. Great jobs report, for example. The bond market seems to pretty much across the board have discounted a quarter point rate in the US. If they should put up by 0.5%, then that would cause trouble, folks. I don't think they will, but Powell may want to give a decisive and strong message to markets that many believe have got carried away since the November lows. So I personally, I don't think it's time to be too brave until all this news is well out of the way. If I have a look and blow up to how I try and make some extra money is trading in the SPX. In the UK, we have a wonderful system called spread betting. So those of you that are listening out of the UK, to take advantage of this, you would have to trade the tracker, the XPY, or the E-mini futures market. But as I say, we can spread bet on the index itself in the UK. That was yesterday's trade. You get very lucky when you're trading with this 21 bar moving average. This is a 15-minute chart. In my old age, I've moved from 5 minutes to 15 minutes. It's a much more relaxed lifestyle. And yesterday afternoon, it gapped down, did its best to fill the gap, but couldn't do it, and I shorted it down below that low. Again, I had a young fellow with me who wants to learn how to trade short term. And he asked me, how did you know it was going to fall? I said to him, I didn't. I just simply didn't. In the same way as I don't know whether it's going to go up today, but I would be tempted, I haven't done anything yet, but I'd be tempted to look for an entry on the long side today for a few points. That's all, just a scalping trade. Last week, you really don't need that much. Market is trending up, folks. And then we had some inside bars are wonderful, not because they're particularly predictive, but because they allow you to test your trading idea with limited risk. So there's 1, 2, 3, 4 as an hour's worth of trading there. And when it broke that high with a stop loss underneath that low, even on an intraday chart, and this takes some doing, you should have made twice as much as you had to risk. I did a video last week about my the Wyckoff Spring. That was a classic Wyckoff Spring, and if you go back to the longer data, there's actually a shoulder up here, so classic Wyckoff Spring. But if you hadn't got that one, there was some inside bars just here, and that on Friday was a down inside bar. I was sleeping, should have traded that, but traded it just here, and that is what the candlestick people, I think, call a morning star. Down, doji, up, morning star, and there was a few ticks on that. There was one day last week, I think it was last Tuesday, that I got mangled a bit. So today, I think that the 24-hour market looks quite positive today, because that's the 24-hour market, and this is an hourly chart. And as you can see, it has pulled back into this range where the market seems quite comfortable. That range, that's also 62% of this move. And you can see this fairly pretty falling wedge, which has always stood me in good stead. That was the level, but that happened certainly. You can see on the RSI here, the price is falling, and this is flat. That was certainly the level, but that happened before the US market opened, and I don't particularly look at it before the US market opened, so I missed that simple. But that was the entry. And now I would be tempted to look for an entry point on the 15-minute chart. Inside bar above the 21 period moving average would be first prize, that's for sure. So I don't think a great deal to do. In terms of the watch list that I have in the US, folks, I've still got it in here because I just find it easier to find. But a target I got stopped out of yesterday right at the open, and the XLE, it's up a little bit today, but I was sitting very, very close to my stop loss when it opened this morning. GDX, I'm still holding on to it. My stomach tells me that the gold market needs to pull back quite a bit, but I'm still holding on to it. And my trade in Deckers is slightly underwater. Slightly underwater. Not much, but slightly underwater. So I haven't done much in the US and the UK. Anybody that needs to review what I've done in the UK, I went through the stocks that I'm holding at the VectorVest Monday afternoon Q&A, and I'm pretty much, I think about 65% invested in the UK. The last confirmed up that we had in the UK was on November the 5th, and all measures of the trend on VectorVest UK are up, and I'm doing my best to sit in those. And it's certainly not 2020, 2021 level of profits, but nevertheless, apart from one position, they're all profitable. That's not true. Two positions, they're all profitable. The gold mining stock, Pan-African Resources, is slightly under where I bought it. And Cape Tech is slightly under where I bought it after a very, very good run last week. I'm not worried about either of them, but wary in case Ray Dalio and Jeremy Grantham are in fact correct. So I will do my best to try and lock in those profits. So I hope you found this useful. I don't think there's not many people in the world really know what's going to happen next. And my advantage always has been my flexibility, where I can change my mind very quickly indeed, not locked into any one dogma. that's a characteristic. I was reading a book about Steve Jobs, and it seems he used to infuriate his colleagues by arguing one point uh, vociferously in a meeting. Then some new data would come in, and he would change his mind completely. And that's one of the skills that's helped me along the way in this trading endeavor. So at the moment, the trends are up. The only reality, folks, is the last tick. And if we go back to the front page of VectorVest, we can see that all the measures of the trend on VectorVest are up. And until that changes in both the UK and in the US, then I shall do my best to hold on to long positions. I haven't been particularly aggressive in the US, but if this run keeps going, then I hope to be back to 100% invested in the UK. Let's see what the market does in a very, very, very important week. Thanks very much. Bye-bye.